The area between 50 and 61.8 level is known as the golden zone. Typically, the price will pull back to this area before reversing. A pullback to these levels indicates that the trend is mature and experiencing deeper pullbacks in price. However, a mature trend does not necessarily indicate weakness. In fact, such trends can last for a long time before reversing. Throughout the rest of the video, we've exclusively used the golden zone for our trades and strategies. Please remember this going forward. As mentioned earlier, many traders need help with determining the swing points to use when drawing Fibonacci levels. Let's now solve this problem. The secret hack. To solve the problem, we will use a simple indicator called Fractals. Fractals is an indicator that helps us identify reversal points. The indicator plots arrows at the reversal points. Fractals are of two types, up fractals and down fractals. An up fractal is created when the high of a particular candle is higher than the previous two and the next two candles. It shows a bearish price reversal. On the other hand, a down fractal is created when the low of a particular candle is lower than the previous two and the next two candles. This shows a bullish price reversal. To plot this indicator, go over to TradingView and click on the Indicators button. Then type in Fractals. Click on this indicator and your chart should look like this. If we keep the settings to default, the indicator will plot every minor reversal. That will end up confusing you more than solving the problem. So we will change the settings to 5 period. Now, the indicator will mark only the strong reversal points. However, sometimes the indicator will also mark irrelevant swing points. Therefore, you can use this indicator as a beginner, but your long-term goal should always be to develop experience in identifying major swing points without the indicator. All we need to do now is look for a trending market and draw the Fibonacci retracement tool on an impulsive move. Here is an example. Here we see that price was in an uptrend, making higher highs and higher lows. Then, we spot this impulsive up move. The move starts from this down fractal and ends up at this up fractal. So, we draw the Fibonacci retracement from the start to the end. As you can see, the price then pulls back to the golden zone and reverses upwards. Here, strategy number 1, swap zone confluence. Swap zones are one of our favorite techniques to add confluence to any strategy. Swap zones are nothing but levels of support and resistance. When the price breaks below a support level, it becomes a resistance level. Similarly, when the price breaks above a resistance level, it becomes a support level. Since the support and resistance swap with each other, we call them swap zones. We will use this concept in combination with Fibonacci retracement to identify trade opportunities. Here is an example. The price was in an uptrend, making higher highs and higher lows. Here, the price makes a high and pulls back. We identify this as a resistance level and mark it. Then, the price breaks above the resistance and makes this impulsive move. Once the resistance is broken, it has now turned into support. Now, we draw a Fibonacci retracement on the impulsive move. As you can see, the golden zone on the Fibonacci retracement coincides with the support level. Therefore, it acts as a double confluence. When the price pulls back to this golden zone, we will look for our entry using the technique discussed later in this video. Strategy number 2, moving average confluence. Moving averages are a simple indicator with lots of different uses. One such use is that they can act as a dynamic level of support and resistance. When the price is in an uptrend, the moving average can act as a support for the price. Similarly, in a downtrend, the moving average can act as a resistance for the price. We will combine this use with the golden zone to spot high probability trades. For this strategy, we will use the 50-period exponential moving average. Here is an example. The price was in an uptrend as it traded above the EMA, and the EMA was sloped upwards. In an uptrend, we expect the price to find support at the EMA, so buying near the EMA is a good idea. Now, we spot this impulsive up move and we draw the retracement tool on it. The golden zone coincides with the 50 EMA. When the price pulls back to the golden zone, we can expect the price to find support and move upwards, so we would enter a buy trade near this area. As you can see, the price touched the golden zone and moved upwards. Moving on to the last strategy. Strategy number 3, anchored VWAP confluence. Anchored VWAP is one of our favorite indicators at Trade Prime. We find it highly accurate in finding solid areas of support and resistance. Anchored VWAP is a tool that plots the VWAP from a selected starting point. Like the moving average, it can act as a dynamic area of support and resistance. In an uptrend, whenever the price falls below the anchored VWAP, buyers will come in and push the prices upwards. Similarly, in a downtrend, when the price moves above the anchored VWAP, sellers will come in and push the price downwards. Let's combine this property with the Fibonacci retracement to identify strong trades. We see that the price was initially in a strong uptrend. Then, the price makes this strong impulsive move upwards. Now, we will plot the anchored VWAP from the start of the impulsive move. Then, we draw the Fibonacci retracement on the impulsive move. The golden zone and the anchored VWAP coincide at this price area. Therefore, this area should act as a strong level of support. When the price pulls back to this area, we will look for a buy entry. And as you can see, the price bounced from the golden zone and moved upwards. Now let's discuss our entry technique to help you enter these opportunities. Entry trigger, engulfing bars. An engulfing bar is a 2-candle formation where the second candle engulfs the entire first candle. In other words, the high of the second candle is higher than the previous candle. Similarly, the low of the second candle is lower than the first candle. Engulfing candles can be of 2 types, a bullish engulfing candle and a bearish engulfing candle. A bullish engulfing candle is green in color, it represents a bullish reversal in price. We will look for these candles for a buy trade. On the other hand, a bearish engulfing candle is red in color. It represents a bearish reversal in price. Therefore, we will look for such candles for sell trades. Here is an example using the anchored VWAP confluence. Here, the price was in a strong uptrend. It makes this strong impulsive up move and then pulls back. We plot the anchored VWAP at the start of the up move. As the price starts to pull back, we draw the Fibonacci retracement. We see that the golden zone coincides with the anchored VWAP. So we expect the price to find support here. When the price reaches near the golden zone, it creates this bullish engulfing candle. The big green candle covers the entire red candle. It is a bullish engulfing candle, indicating that the price might reverse upwards. Here is a sell trade using the swap zone confluence. The price was in a strong downtrend as it moved lower. We spot this reversal point and mark it as support. Then, the price moved lower, creating this impulsive move. The move broke the support level and turned it into resistance. Now we draw the retracement tool on the impulsive move. The resistance zone coincides with the golden zone. So, we expect the price to face strong resistance around this area. When the price arrives at the golden zone, it creates this engulfing candle that signals a downside reversal. A sell trade could be initiated here. And as you can see, the price moved lower after our entry,